Hey everyone, it is Jay Soloff with Investors Alley, and this is our options trade of the week. We are here at marketchameleon.com, and we are looking as usual at our unusual options volume activity. So, looking at this information, we can see that it was a big sort of bullish day, and there was a lot of options action. So let's sort it by volume to see what kind of some of the bigger names might have been doing. Quite a bit of energy related stuff here. You can see we have Exxon, Freeport has an oil business, the XLE, which is the energy sector, Occidental Petroleum. So what happened was there was a surprise cut in production from Saudi Arabia, which was very bullish for oil. So it doesn't surprise me to see a lot of these energy and oil companies on there. So look at Exxon, and there was certainly a little bit more call activity than puts, which is usually a bullish sign. But we can dig into some of the trades and see what might be going on there. As you know, Exxon is one of the biggest, if not the biggest, oil conglomerate out there. It's been trading, it's trading a little bit under $70 a share. So let's look at some of our trades here. All right, let's see trades. Let's see what happened. We'll sort this by quantity so we can see what some of the bigger trades were that occurred. And you can see here's quite a big spread right here. It's almost 6,700. Looks like it was done on actually a floor trade. So what's going on here is there are two possibilities. So this is December trade. It's December expiration. So about 2 weeks on this trade, or exactly 2 weeks actually, and it's a 67.5 put spread. So what does that mean? Well, it could mean, like I said, it could mean a couple things. So it looks like the 69 put was purchased, right? And the stock is at 69.50. And so that's basically the at the money put. And then the 67.5 out of the money put was sold for 27 cents. So what does that mean? Well, it could just be it could be a put spread, which was done to lower the cost of the trade, or potentially it could be rolling out. It could be rolling up a trade. Maybe the 67.5 puts were there previously, and now the trader wants to move up those puts to the 69 puts. So could be a roll trade, could be closing out 67.5 puts. With the open interest here, it's very possible that this is rolling up a trade at the same expiration, but it also could be a straight up put spread. So we looked at the open interest at next week. We would know for sure, most likely, unless there was a bunch of other noise at the time. So why do a put spread when there's bullish news? Well, it doesn't necessarily mean that this is a bullish trade. It could be a hedge. Someone could be purchasing a bunch of stock because of this positive news, and they will want to hedge their position. Or maybe they already own a bunch of stock, and since it's going higher, they feel like they need to hedge to protect some of their profits. Or it could also, potentially be a bet that it's going to go back down. Maybe they feel like this up move, the Saudi cut isn't really going to impact Exxon all that much, and it's up kind of needlessly, and it's going to come back down. So it could be a speculative bet. My guess, generally, with something like this is that it's a hedge. So, and also with this specific number of 66.82, that seems like it might match more closely when it's an odd number like that, like a certain amount of shares that someone owns. So my guess, this is a hedge. But it's interesting to see a big hedge like this on an up day. So, that could actually be... that could actually be a sign that, that this is either that XOM has kind of reached as high as it may go, or maybe it's someone increasing their position, so they're actually even more bullish and they're using this just to be safe. So regardless, this is an easy trade for you to make. If let's just say this is a spread and not a roll up, it's only only costs you about 38 cents to do a trade like this, so not a lot of money to put on. If you have oil or Exxon in your portfolio, that'd be an easy thing to do. Or if you're bearish and you just want to take a cheap bet on it, 38 cents is not a lot, and you can make $1.50 minus 38 cents, so $1.12 on this trade if it does go down to 67.5. If you're interested in learning more about this stuff, or trading these types of trades, or just trading options in general, you can check out the link for my my $49 service per year. It's Option Floor Trader Pro. Again, it's only $49 a year. You can check it out. We do trades every other week, so it's a good way to get introduced to options and learn how to do this sort of thing on your own.